So I just flipped 1,500 rands to like 12, 13,000 in years. What's happening, guys? Dr. Martin. Welcome back to my channel. If you are new, do me a favor, do click that subscribe button, like the video to help the algorithm to obviously push the video even a bit more. So a couple of years ago, I actually recorded a video on how to grow a small account, and on today's video I want to take you guys through the same process and phases of actually flipping your account into bigger amounts. So I was trading today, actually just a couple of minutes ago, and I will show you guys the screenshot right now, or rather the screen recording. So I took an account from 1,500 rands and I grew it all the way up to, let me see, oh my goodness, all the way up to 12,338. And obviously this is a common system and a method in South Africa. A lot of people come to YouTube to obviously try and learn this method and to actually see how we actually are able to flip these kind of amounts into larger accounts. So the first thing that you want to focus on when you want to grow your account into these big figures, I will say that you want to first master the skill of trading. If you are new to the channel, you can go to the past couple of videos that I have actually done in the past to actually see one of the steps that I actually take and go about in order to find the sustainable direction for the market. So if you actually are lazy, I'm actually gonna tell you right now. So the first thing you want to do to obviously spot and identify your trend. I think I did do a video on market on market structure. So you do want to identify your structure and where the market is going, and secondly then you want to obviously drop down to smaller time frames to find critical areas and zones and levels. As you can see on this trade that I took, I did take it at a very strong resistance level on the smaller time frame, and I mean that drop was like a 60-70 point drop, which is obviously like 1,000 rand per position. So that's like $70 if you're not from South Africa. So $70 per position on a 0.01, and that is a sustainable amount. So you do want to obviously find your structure first of all, and secondly then you want to drop down to a slightly smaller time frame to then be able to spot and identify critical areas and levels and zones within these within the market you're trading. And right after you have identified these levels, then you drop down also to a smaller time frame, potentially the 1 minute time frame, to then be able to find your entry point. So the trick with trading indices is that indices are not moving like currency pairs would move. So with currency pairs you want to look at the higher time frames like the daily, the H4 and the H1. You start looking for entries, but on indices you want to look at the H4, you want to look at the H1. So the H4, you obviously are trying to look for your structure and to obviously identify where the market is going. I'll try and add like a bit of a video, like an example of what it is that I'm talking about right now. So you identify your structure on a higher time frame, which is in this case the 4-hour time frame, and right after identifying your structure on the 4-hour time frame, then you go down to the H1 time frame to look for these critical areas and zones that you will mark up. Personally, I trade a strategy that moves within equivalent ranges. So I believe that the market distributes equivalent ranges between areas of support and resistance. So I will obviously come down to a slightly smaller time frame to identify those zones and those levels. And then I'll go down to the 30-minute time frame to look at candlestick pattern and formation to obviously understand how the market has actually formed around these certain areas and levels of support and resistance, and how previous candlesticks have actually closed around these areas. And after I have identified candlestick patterns, then I drop down to the 15-minute time frame to also confirm what I have seen on the 30-minute time frame. Then I drop down to the 5-minute chart, and on the 5-minute chart, that's where I potentially look for my setup and my entry points. So the M5 on indices is slightly a lot better to understand than the higher time frames, because what you see on the smaller time frames will eventually translate into the high time frame candlestick closures. So it's important that you understand how these candlesticks close on a smaller time frame, and then you can go down to the higher time frames to understand that these smaller time frames are actually a confirmation of what the higher time frames candlestick will actually close as. And then you obviously come down to the M1. So the M1 is obviously the most favorable time frame that I do trade. A lot of people trade patterns. I personally don't trade patterns. Some people will be looking for double tops, double bottoms, and some will be looking for head and shoulder patterns, inverse head and shoulder patterns. I personally look for structural entries. So what I mean by that is that the market will come and test at the same high level a couple of times, and when it comes back to that same high area, then I will obviously execute my positions to the take profit targeted towards that anticipated direction. So I look for structural entries. I will enter my trades on the highs and the lows of structure that's printed on the smaller time frame, and that is one of my most favorite setups to trade. So right now US30 was caught up in a range, and obviously when the market got to that resistance level, I potentially knew that there is a high chance that the market will go down, because I mean, from the high time frames perspective, we are kind of like looking bearish, and that was also like a critical area for me as well. So then I came and I executed my trade based off of that specific zone and level that I was obviously looking at. So this is important to understand, especially when you are trading high leverage trading like we do trade. So these are the kind of setups and formations that you do want to look at. And obviously, for more reference, the guys that are new, you can go back to the video. I'll pin it right now on the description below, the one video where you can go learn how to draw your support and resistance levels, and to also identify your structural formations, and the video I did like 2 years ago where I was speaking about the points you want to observe and look at when you are trading structural trading. So this is a video to also motivate and encourage you that trading is real, and if you do focus on the craft and the skill that you obviously have learned, you will see positive and profitable result in your trading career. And this was a quick and short video because I didn't want to like stay for long without uploading. So this is a quick video to announce that I am back, and I'll be bringing you guys more educational content. So do look out for more videos that are coming. The next video that will be dropping is a video of me explaining how to properly pass prop firms if you aren't really interested in trading the way some of us do trade and are interested in trading prop firms. I will be dropping a video on how to actually pass your prop firm, because I have actually traded a couple of prop firms. So I'll show you guys how to pass prop firms, and I will also show you guys one prop firm challenge that I have been trading recently and that I did purchase, and the withdrawal history as well. So do look out for that. And once again, do share the video, like the video, comment down below, let me know what kind of content you'd actually like to see on the channel. Once again, this is Dr. Martin signing out. Peace out.